10 common bookkeeping mistakes and how to avoid them. You might be making mistakes right now as a bookkeeper or a business owner, and you might not even know that you're making these mistakes. But don't worry, I promise you, I've been doing this for 4 years, and I probably already made the same mistake that you are about to make. So I'm going to use my 4 years of experience to give you some tips and tricks on common bookkeeping mistakes that I probably have done at one point in my career. And then I'm going to give you tips and tricks on how to avoid making those mistakes. My name is Zach Pasquarello. I own my own bookkeeping business. I make these videos truthfully because I love talking about my bookkeeping business. And honestly, my family and friends are sick and tired of hearing me talk about it. So here I am on YouTube talking to other aspiring bookkeeping business owners. And my whole goal here is just to share my lessons learned, tips and tricks, mistakes that I've made so that you can avoid the mistakes that I made and also fast track to success. So I'm just going to jump right into it. I'm going to give you 10 common bookkeeping mistakes to avoid and then how to fix them so that you don't make them again. Number 1, not reconciling accounts regularly. Failing to reconcile bank accounts, credit cards, loan statements can regularly lead to inaccuracies. If we don't reconcile accounts, we have no idea if we're missing transactions or if we've added duplicate transactions. Especially using software like QuickBooks Online, there are always technological difficulties and mistakes happening. Like, for example, maybe your bank account temporarily gets disconnected from the bank feed. So you might be missing a day or a week or a whole month of transactions, and you have no idea until you go to reconcile your accounts. So you need to set up a regular schedule, probably monthly, for reconciling your accounts so that you can catch these variances and discrepancies early and not wait until the end of the year or, God forbid, until after you filed your taxes and then it's too late or you have to go in and amend your tax return. So when you're reconciling, you simply take the bank statement, credit card statement, loan statement, look at the ending balance, and make sure that number matches whatever you have in QuickBooks. And then if it reconciles, if it ties out penny for penny, you can be pretty confident that there are no mistakes because the ending balance is exactly the same. Okay, common mistake number 2, ignoring receipts and small transactions. So I don't require my clients to upload receipts to QuickBooks and to match to their transactions, but I still recommend everybody keep receipts. And ignoring small transactions, obviously, that's a silly mistake. If it's 1 penny, $1, even $100, we still need to account for it. Even if it's 1 penny, we need to account for it because we cannot have our ending balance off. If it's off, then it's not going to be right. We're going to have to fix it. So you cannot overlook small transactions, and not keeping receipts might not hurt you right now, today, this month, but in the event of an audit, or if your client or anybody is looking back at previous transactions and they have questions, if you don't have receipts or backup or documentation, it might be really difficult for you to answer those questions. So it's always a good idea somehow digitally organize your receipts. Doesn't have to be in QuickBooks, but I still recommend keep the receipts, digitally organize them so that they're easy to reference. Okay. Common mistake number 3, mixing personal and business finances. This is one of the worst things any business owner can do. You as the bookkeeper need to encourage all of your clients to stop mixing personal and business finances because you guys already know bookkeeping is categorizing transactions. So if we're combining business and personal transactions, now we have to sort through and categorize so many more transactions, not just the business ones. So if your clients are doing this, let them know that you strongly recommend that they stop using their business account for personal transactions. As soon as you open up a separate bank account, a separate business credit card, it should be pretty simple. Just you got to carry 2 debit cards and 2 business credit cards in your wallet or in your purse so that you don't mix business and personal transactions. Common mistake number 4, misclassifying expenses. This is like our whole job, categorizing transactions. classifying expenses. So obviously, incorrectly categorizing expenses will lead to inaccurate financial statements and potentially affect tax deductions. A really big one here is meals. If you incorrectly classify something as meals, that might only be 50% deductible. So if a client spends, $500 and you categorize it as meals, but it really should have been job supplies, they're going to miss out on a $250 deduction. That's just one very specific example. But also, if your client is reviewing their financial reports and you say something as insurance, but it really should have been property taxes, then they're not going to have accurate financials. It might not affect their tax return because it might still be categorized as an expense. But if they're reviewing their financial reports and they're looking at consistent categorization amongst the categories and the chart of accounts, then their financial reports, like their profit and loss, is not going to be accurate. It's going to be misleading. That could potentially frustrate your client and ultimately make them fire you if you do this too many times. So you want to make sure you do a good job, pay attention, slow down, and make sure you're classifying expenses correctly. This often happens if you are using rules in QuickBooks, and if you incorrectly set up the rules, then it will automatically categorize expenses and potentially income incorrectly. So be careful when you're using rules, understand the chart of accounts, and finally, don't be afraid to ask your client questions. If there's ever a question or a transaction that you're unsure of, simply ask your client. Send them an email. Hey, on August 26th, there's this $1,000 withdrawal. What was it for? Who did you pay? What did you buy? Never be afraid to ask questions. I would always rather ask too many questions than not ask questions and make mistakes. Okay, common mistake number 5, not keeping up with tax deadlines. Probably most importantly for us as bookkeepers would be the January 31st, 1099 tax filing deadline. But also, it's important to know April 15th when individual income tax returns are due, March 15th when S-Corp and partnership tax returns are due. Maybe your clients go on extension and maybe their taxes are due in October. It's important to know unemployment compensation, sales tax, that can change for every state, and payroll taxes. It's important to know these things just in case your client asks you. It's always good to be prepared to be able to help your client, even though you might not be filing these taxes for them. But it's important to know this stuff because if your client misses tax filing deadlines, they might have to pay penalties, interest, and fines. And although it might not be your responsibility, still, whenever your client gets frustrated and stressed out about their finances, it's ultimately going to come back on you and the tax accountant or the CPA. So it's just good to know these deadlines and be able to answer these questions or be able to let your client know that these tax deadlines are coming up in the future. I love using social media to tell people about tax deadlines. It's a great way to create social media marketing content. It's also a great way to let all of your clients and potential clients to let them know about upcoming tax deadlines. And you can also send out email reminders to all of your clients about the upcoming tax deadlines. Okay, number 6, forgetting to back up data. Not really super applicable to QuickBooks Online. If they're using QuickBooks Desktop, certainly. But I want to take this in a different direction. If you are changing anything in QuickBooks, so because it is cloud-based software, as soon as you make a change, it changes everything and it automatically saves. So what I do recommend, if you're about to make a big change, consider this. Export the budget or the balance sheet or the P&L or the statement of cash flows. Export the report before you make the change and then make the change. That way, or take screenshots of things. That way, if there's ever a question, you can look at the previously exported report, or you can even take a screenshot. For example, if you delete a journal entry, take a screenshot of the journal entry before you delete it, and then you can attach it to something in the future. That way you have some record, some data, some reference point to go back and look at what was there before, maybe make a note, why did I make this change? Yeah, so use cloud storage services. and schedule automatic backups if you're using different types of accounting software, but most of us are using QuickBooks Online. It automatically updates. If you have a Google Drive or a OneDrive on your laptop, definitely recommend back up your documents and your computer to a cloud. Just in case your computer crashes, at least you'll have all of the important documents from your computer backed up to the cloud. Okay, tip number 7, overlooking accounts payable and accounts receivable. So if you're managing this for your clients, this is obviously super important, but even if you're not managing accounts payable and accounts receivable, it could be really important, because if your clients file on accrual basis, then failing to track invoices and bills can actually make their profit and loss and their taxes wrong. If they're not closing out invoices and closing out bills correctly, then and they file on accrual basis, this income and these expenses might still end up counting for that tax filing period or for that income statement or that balance sheet. So you want to know, how is your client filing taxes? And you also want to double check, are they managing their accounts payable and their accounts receivable? If you are managing accounts payable and accounts receivable, obviously super important. What I do, if I'm managing accounts receivable for somebody, I will schedule an automatic email, an automatic report from QuickBooks to go to my client, usually on a weekly basis. I will schedule the accounts receivable aging detail report to go to my client every single week. That way, I'm covering my basis. That way, if there is an open and outstanding invoice that has not been paid, my client is made aware of it on a weekly basis. So that's a great way to make sure everybody's on the same page, and you can set it up automatic. It sends out every single week. I usually only do that if I'm helping to manage accounts receivable. The other thing you can do, there is a QuickBooks account called either undeposited funds or payments in transit. It's often used if QuickBooks is your payment processor. Super, super important that you check this asset account on your balance sheet, especially if they're using QuickBooks to process their payments. Because if you create an invoice and you close out the invoice, it might deposit the money into this undeposited funds account or this deposits in transit account. And then if you receive the bank statement in the QuickBooks bank feed, if you don't match that bank deposit to the received payment in undeposited funds, it will double count your income. That's kind of confusing. Hopefully that makes sense. Super, super important. You always want to check undeposited funds to make sure they are not double counting their income. You should never have a rolling balance in undeposited funds. Money should only ever be in this account for a couple days or a week at most. Okay. Number 8, not reviewing financial statements regularly. Ignoring regular reviews of financial statements can prevent you from catching errors and understanding the financial health of your client's business. So this is a big reason why I get a lot of new clients, because their previous bookkeeper or accountant or CPA firm, whatever it was, they were not sending the profit and loss on a monthly basis. This is a big selling point for me and all of my clients. I will send you, if you are my client, I will send you your updated profit and loss, usually in the first 10 business days of every month, as long as you are able to answer all of my questions. So important. And then before I send it, I will double check it. I'm not going to go through every single transaction, but I will look at each line item, make sure it kind of makes sense. If I have $500 every month at insurance and all of a sudden this month I have $5,000, I might look into it and figure out, why is there such a big jump? I will briefly, maybe 5 minutes, spend some time, look over each P&L before I send it. But absolutely, you have to send the profit and loss to the customer every single month. Also, good idea to check the balance sheet. Everything, this is so important, everything on the balance sheet should make sense. There should never be a line item on the balance sheet where you or your client are like, yep, no idea what that is. It happens all the time. I take over books from businesses who have been in business for a long time, and there are always line items on the balance sheet that nobody knows what they are. That's not a good thing. It should not be like that. So come up with a schedule. Tell your clients, I'm going to send you the profit and loss usually the first 2 weeks of every month. If you want to review it, we can. We can set up a time to go over it together. Let me know if you have any questions. Be happy to help. That's where you can really add value to your bookkeeping clients. Okay, we got 2 more. Stay with me here. Number 9, failing to stay updated on accounting standards and regulations. Not quite as important for bookkeepers, but still important. CPAs, tax accountants, obviously, for sure. But for bookkeepers, still important. If you don't keep up with this stuff, then you might make errors that you don't know about. A couple things that have happened in the past recently, like entertainment is no longer tax deductible. Understanding how charitable contributions work with your clients and their taxes and their Schedule A and their itemized deductions versus the standard deduction. The change in the standard mileage rate for writing off the business use of your personal car. And during COVID, meals were 100% deductible. Now they're only 50% deductible. Those are just a couple examples how these rules and regulations could potentially affect how you do bookkeeping, and more importantly, what you talk to your client about. Like, we're not tax strategy people. We're not CPAs. So I try to stay away from giving too much tax advice or tax strategy. But as a bookkeeper, we do know a lot. So we still can help our client as much as we want. Okay. Tip. Yeah, you just keep up with professional organizations. You can attend webinars, continuing education, read industry publications, stay informed about changes in the field. This is really great for social media marketing. If there's a big announcement, if there's a big change, you can post it on social media. You can learn about it, which is good for you and your business, but then you can also use that information to create a social media post. So it's a win-win. You learn about it and you come up with some content. Okay, last one. This one might be the most important. Lack of communication with clients. Not communicating regularly with clients will lead to misunderstanding, errors in bookkeeping, and ultimately just a frustrated bookkeeper and a frustrated client. And that's what we want to avoid. Our whole job is to reduce the stress of these business owners. So if you're not communicating effectively, if you're not answering the phone, responding to emails, sending a profit and loss, sending a list of questions, following up when the client doesn't answer your questions, you're not going to be successful. You need to learn how to communicate effectively with your clients. And that's going to look differently for everybody. Some people might be more direct. Some people might be more aggressive. Some people might be a little bit more passive. Some people might love text messages. Some people might love emails. Some people might only do phone calls. You got to figure out the best way to communicate with your clients. Set up regular check-ins. If your client wants to meet quarterly or monthly, do it for 10 or 15 minutes. It's not going to take too much of your time. And if it helps your client reduce their stress, it'll be good for you and your business. And as always, make sure you send the profit and loss on a monthly basis. Okay, so if anybody else has any common bookkeeping mistakes to avoid, I would love to hear it in the comments of this video. Let me know. Subscribe to my channel if you haven't already. I'm posting new videos just like this every single week, trying to help you start and grow your own bookkeeping business. And finally, I have a ton of links in the description of this video. Feel free, check them out. I have some things that are paid, some things that are free. They're all designed to help you start and grow your own bookkeeping business. So appreciate you guys watching this video. Hopefully it was helpful. I'll see you all in the next one.